U.S. stock rally starting to lose some steam after the S&P 500 wipes out its losses for the year. Investors in wait-and-see mode during the 90-day tariff pause. But Wall Street is optimistic with recession calls beginning to fade. So what's needed to keep the rally going? Yahoo Finance's Josh Schafer joins us now with more. What's on the shopping list? What do we need?
Yeah, Julie, I mean, it seems like you need perhaps a little bit more news in terms of trade deals, right? And then also strategists coming out and saying that perhaps just more confidence in the economic data story, because right now it seems like you have a market that is no longer pricing in a recession and perhaps pricing in economic resiliency. So if you see some stronger data or data continue to hold up, that would probably be a key part of this. But I think, guys, I want to zoom out a little bit here too and just sort of highlight, you guys just mentioned off the top, we erased our gain or our losses for the year for the S&P 500. That happened, so 15% drawdown year to date for the S&P 500. S&P 500 bounced back in less than 6 weeks, erasing those losses. That is the fastest climb back since 1982 for the major index. That gives you a little bit of perspective on just this massive rally, really, that you have seen in the last couple of weeks. And now strategists sort of sitting back and saying, okay, we have a little bit of a market price for perhaps perfection here at this point based on all the uncertainties that are out there. So people starting to feel a little bit more uneasy, at least in the short term, as far as where markets head next.
How much does AI need to be a part of the continued rebound?
I think it definitely does, Brad, right? So overall, I mean, that's what's been driving the market over the last couple of days. You guys just hit on NVIDIA shares being up this morning. And I think it's interesting, we've talked a lot about S&P 500 is back to positive on the year. NASDAQ is back to positive on the year. You know what's not positive on the year? The Mag 7 index. Mag 7 index still off about 4.5%. I was just looking on the year. Of course, that also includes Tesla, which has had a massive drawdown. But I think overall, you're starting to see some of these strategists that see higher targets. David Kostin over at Goldman Sachs highlighting that he thinks more investors are going to continue to pile in to big tech and AI related names, given that's where your earnings growth is. You're looking at an environment now where you have the 10-year near 4.5%. You've seen investors come into tech names in that environment, and he was looking just simply at first quarter earnings season. We haven't heard from NVIDIA yet, but if you use the other 6 names in the Mag 7, earnings growth of 30% year over year. Then look at the S&P 493, earnings growth of 9%. So you're still seeing a lot of strength in those big tech cohort. So it might make sense for people to continue to maybe go back into those names.
You know, one of the interesting things that we had heard from investors over and over again before the tariff thing is that they thought this would be a pro-growth presidency, right? And it was sort of predicated on tax relief as well as regulatory relief. Now, the regulatory stuff, I don't know what's going on there. It's sort of piecemeal depending on the industry. The tax bill, though, we're waiting on it. But at this point, it feels like it is more status quo than significant upside for the market. In other words, if it wasn't going to happen, then that would cause a big issue for stocks. But it happening, and happening kind of as expected, doesn't seem to be maybe a catalyst.
No, but you know what is interesting in terms of tax cuts? I thought, so we mentioned the recession call, right? And so Michael Feroli at JP Morgan had a recession call, took his recession call off because of the tariff scale back. He said, well, if tariffs are taxes, and I was penciling in 24% tariffs, now I pencil in 14% tariffs, that's a $300 billion tax cut on the American consumer. So if you're positive on maybe more tariff cuts coming and the tariff rate actually coming lower, that's also perhaps a form of a tax cut. Now, it's a tax cut that the administration, or a tax that the administration had certainly put on without most people necessarily expecting it. But if you're just penciling in growth, a way to actually kind of bring taxes on the consumer down in some way would be bringing that tariff rate down as well. So I think that's kind of an interesting other lever that they have as the administration kind of keeps jockeying the market.
Is it that clear of an offset, though? If companies are saying, all right, well, if the tariff rate is higher and we're just going to pass that cost on to the consumer anyway, how much of a real cut is it for consumers who are still going to kind of bear the burden of that added cost?
Well, I mean, I think he's sort of playing it out as a math equation, right? So if you're going to increase tariffs at a certain rate and the company's just going to flat out pass that on, right? So if it's 145% tariff on this product I'm getting from China and I'm going to pass all of that on to you, and then you cut that down to 30%, it is just kind of taking it off, right? If the company still is only charging you 30% more, what if they come down to 15% or the 10%, right? Then it is just passed on to you at a lower level, I think is essentially the argument that's being made there. Now, again, that's all sort of in flux in general. The final thing I'll say about Trump, and he's sort of coming up a lot, obviously, in these more bullish calls we're hearing on the street, seems to be a lot of confidence now that they don't want the stock market to go down.
Right.
They're all the strategists that are releasing notes that are more bullish on the street right now are saying, this administration has proven in the last month, they act like they're not looking at the market. It feels like they're really looking at the market. Julie, you're looking at me like I'm not sure if you believe that point.
I don't know. In the depths of things, President Trump seemed unwilling to bend purely based on the market. He also talked about the Treasury market in particular getting the yips, as he put it. Right. So I don't know if that was more the issue. I mean, you have to factor in the polling numbers to all of it too. He was getting dismal marks on the economy. So it's hard to sort of tease out one thing. I guess it is, does the leopard change his spots? And he always did care a lot about the market.
Right.
So I don't know.
It did seem like there was a bit of an about face when we were scratching the territory of bear markets.
Yeah.
And what was really prompted kind of okay, well, you know what? We're going to ease some of the pressure and we'll just pass everything over to China for the interim period of time. Right. Bring everybody else's tariff rate down to 10%, institute the 90-day pause, and then from there, we'll just negotiate and see what comes forward. And then, of course, now there's the trade truce with China, at least for this.
I think it maybe provides your protection from more trade war escalation, right? Sure. Which is sort of the fear here that we would go back after this 90-day pause into this back and forth. Maybe it provides protection there.